Hi, dreamers. Let's dive into the M in dreams, and it stands for mortgage. As I've said before, this series is going to be a little more personal as I attempt to answer the question many of you have asked, which is, how did I get the capital in the first place to invest that $1.5 million or $3 million net worth? Now, if you haven't seen the intro, DRE, or A videos yet in this series, I really encourage you to go back and watch those first, and then this one. So let's continue the story and lessons. Literally, this is the formula for how I got here, and each letter is a critical piece. So let's go with mortgage. I'm going to make this very tangible for you. Whether you plan to get one in the future, have one right now, will be getting a second one, or have already paid one off, this is for you. A mortgage is the biggest expenditure you're likely to ever have. And most people just set it and forget it. Most people think it's just one thing, and it's not. So I'm here to beg you, and I'm saying beg you, don't be in a financial coma about your mortgage. This could be life-changing information for you. Don't let this be the leak in your wealth building bucket. Now, I want to address this in three parts: buying, optimizing, and paying down. Let's start with buying. I want you to imagine going to a grocery store and seeing an aisle full of mortgages. Keep this image in your mind. There are many types of mortgages. You can have a fixed rate, an ARM, a HELOC, a cash out refi, a cash in refi, an interest only loan. You can have different lengths of time, 15 years, 30 years, and you can have mortgages with PMI or without PMI, with tax and insurance escrow or without. So first, you should know there are many ways to structure your mortgage. Next, I usually go to banks and credit unions, and often a broker at the exact same time. In other words, make sure you shop around. I've gotten loans from all of the above, and I've always seen who has the best rate. Let them fight for your business. Don't just give it to someone. Credit unions, I've found, often have lower rates, fewer fees, and very different criteria in terms of who they will lend to. But sometimes the trade-off is lack of access to big bank tools. Now let's move on to optimizing. As you know, I optimize freaking everything. So what have I done in terms of mortgages? Personally, I've always done a 30-year mortgage, never less. I never do escrow. I never have PMI. And all of those things add up to having maximum control over my money throughout the course of the year. But it also means you have to be disciplined to pay expenses in lump sums. Usually, I've gotten a 5, 7, or 10-year ARM, or an ARM plus a HELOC. Then I would often pay down the HELOC, then put that extra monthly money towards the ARM. And when the ARM is about to expire and adjust, I would then refi into another ARM. Now, typically ARMs have much lower rates than 30-year fixed. And one drawback on this strategy is loan origination fees. So you don't want to be doing this every 2 to 3 years. And of course, there is the risk that the percentage will be higher next time you refinance. The only time I broke that cycle was with the last mortgage I got due to the incredibly low fixed rates. That's where I got a 30-year loan for about 2.8%. But in this case, I also made sure that the 30-year product that I bought also had the ability to recast. So let me tell you a little bit about that optimization strategy. A recast is when you're allowed to make a lump sum that will reamortize your loan. And just as an example, if you had a 30-year mortgage with a principal balance of $200,000 and a 5% interest rate, your payment would be about $1,200 a month. But if you paid a $50,000 lump sum towards a recast, there might be a recasting fee, but you'd end up saving about $35,000 in interest payments and about $300 a month in mortgage payments. So that's something for you to be asking about when you're actually buying the mortgage. Do they recast? How much are the recasting fees? And what's the minimum you're allowed to put in order to recast? In my case, for example, I have unlimited recasting, no recasting fees, and I can recast for every $20,000 that I put in. So that's just one way to have a little bit of control over your monthly expenses and also be able to save on interest if this was a decision you wanted to make. I also want to note that different banks have different minimum amounts required to recast, some as low as $5,000. So the key is ask questions about recasting because each lending organization will have their own specific rules. Now let's move on to paying off strategies. And this is something you must pay attention to. What if you didn't put any additional amounts of money towards your mortgage, but you were able to pay it down faster, paying the exact same amount that you're paying right now? One way to do that is to pay bi-weekly, or split your monthly payment into 2 smaller payments. So in one example here, here's how it works. Instead of paying 12 payments per year, you'd pay 26. And for example, on a $250,000 30-year fixed loan at 3.5%, you would end up paying off your mortgage 4 years early and save more than $20,000 in interest. Now this is the key right here. Not all lenders allow biweekly payments. So this is yet another question to ask when you're shopping and buying the mortgage, not afterwards. First of all, do they allow biweekly payments, and are they actually applying those biweekly payments to your principal and interest? And can they do that automatically, or do you have to do that manually? Those are some of the questions I like to ask when I'm negotiating a mortgage product up front. So, this could be a really long video with excruciating detail, but I've given you enough to start your research and know the paths you could go down. And I'm not even an expert on mortgages. There's also high net worth options like taking money from your IRA for a home purchase or from private lending. But most regular people don't need these specific use cases. I'm just giving you the basics so that you can get wise to the concept of mortgage optimization. You asked me how I became a millionaire, and this is how. I optimized freaking everything I could. I have no safety net. I realized early that no one was going to save me. No one is going to teach me. No one is going to reach out to me and try to help me. No one. This is me reaching out to you. I am doing this for you because among those watching right now is me 20 years ago. My hand is outstretched right now directly to you. This is your wake-up call. Are you going to act on anything I've said in this Dreams series? Or are you going to go back to what you were doing? It's up to you. You decide. Wait, I want to make sure this sinks in. It's you who decides. Well, thanks for spending time with me today. The last one in the series is S, and perhaps it's the most unexpected and maybe the most important. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.